Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is sponsored by VitaFirm. GainSmart Wheat is a free choice vitamin and mineral supplement for stocker cattle designed to balance basic nutrient needs for maximized efficient gain on wheat or small grain pasture. Learn more at gainsmart.com. Markets were surprised earlier this week when the Bureau of Labor Statistics released their August Consumer Price Index data. The CPI numbers reported a 0.1% increase in consumer prices for the month of August, which translates to an 8.3% year-over-year inflation figure. The median CPI inflation print was up 9.2% year-over-year, detailing the highest price increase on record since the dataset began in 1983. While gasoline prices have been trending lower since June, August gas prices remain 25% above last year. Other segments of the CPI data are still moving higher. Some of the largest contributors to the inflation statistics in August were shelter and energy prices. Shelter costs rose 0.7% in August, their highest monthly gain of 2022, even as housing costs have tracked gains all year. Electricity and utility gas services increased 2.1% and 1.5% respectively in August. Food costs saw a 0.8% inflation in August, which, while still increasing, was the smallest monthly gain so far this year. Overall, inflation is still having a clear negative effect on investor attitudes and will likely lead the Fed to impose tighter credit conditions going forward. Monday saw the S&P 500 close on top of its 20-day moving average for the first time since late August. Tuesday, when the BLS released the inflation data, the market sentiment shifted abruptly, sending the S&P down 4%. Next week, members from the Federal Reserve Bank will meet and are expected to adjust the Federal Reserve rate higher by up to a full percentage point. The yield on a one-year Treasury bond has climbed to 4% from less than 0.1% last year. Not only have bond yields risen to their highest since the year 2000, but the yield curve has also inverted to extreme levels. An inverted yield curve has been a historical precursor to a period of negative economic growth. Today's yield curve inversion is deeper even than 2006, the setup for the Great Recession. On August 15th, the spread between yields on a 2-year note and a 10-year note declined to 0.42%, the lowest since August 2000. Commodities were flat to lower this week after the disruptive economic data. Spot WTI crude oil and natural gas both finished this week down roughly 1%. September grain futures contracts expired this week. December came on as the spot contract in corn, trading down 1%, while November became the spot in the soybeans, losing about 3% on the week. Spot live cattle futures closed this week down about 45 cents per hundredweight, while cash cattle traded higher by mostly $1 across all regions. Thanks for watching. Remember to visit CattleFax.com to become a member to see the latest market news and analysis.